Hello, good afternoon. You're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Shell D'Souza as well. Cheryl, a very good afternoon to you as well. But not much of an excitement, at least, that we're seeing coming in on the D Street. PSU banks, that's the only excitement buzzing away.
Absolutely. Good afternoon to you, Vinny. If you look at the excitement part, it all fizzled off after the market opened, actually, because we opened at the record high levels. From there, we've given up those gains. We are sub 22,200 right now when it comes to the benchmark indices. Let's take a look at what Nifty Bank is doing, because that's the one that actually gave up some gains much before the benchmark indices earlier on. But now it is outperforming the benchmark indices, still holding on to the positive territory, and that is the Nifty Bank for you. While on the benchmark indices front, we are trading flat with a negative bias.
Okay, that's how the market setup is looking like. A lot of individual movers that are there in trade as well, and that's what we'll be talking about in the next 1 hour of the show as well. And obviously from the research team, we do have Snehi as well as Ankita joining in with us. So yes, we'll be keeping an eye out on that. Nagaraj will be joining in with us shortly as well. But let me start then with the first stock that we'll talk about, GOCL. That's the one that is in focus as well. And why is that so? Today, last evening, we had the company's promoters, Hinduja Capital Limited, Mauritius, plans to actually reduce their holding by about 1% from the present 73.8%. They want to bring it out to 72%, and this is going to be via a block deal that will be happening as well. So GOCL Corporation is a stock that has been in focus today. We saw the stock actually run up a lot in trade as well, as of now also holding on to gains of almost 11% as well. But yes, this was the main news flow that was keeping the stock a buzz as well. And according to the company, the stake sale will enable GOCL Corporation to obtain the necessary license to take up and expand its business that is going to be in the defense sector as well. So on the back of that, today we are keeping an eye out on GOCL Corporation, as of now holding on to gains of almost 12%.
All right, there is one particular counter that is also zooming just like GOCL in today's trading session, and that is ABV India. They actually reported their numbers, healthy set of numbers coming in for the counter, 10.9% uptick coming in the profits. It's coming at around 339 crore rupees. Total revenue from operations saw an uptick of as much as 13.6%. The company has said that the growth has come on the back of deepening engagement into diverse market segments, portfolio expansion, as well as localization for the Indian market. Apart from that, they held a con call, and key takeaways coming in from there. They said that the data centers, railway and metro electronics are high growth segments. The ROC reached highest level at 29% in CY23. They've also said the motion segment profitability was impacted owing to a forex impact. Apart from that, they've said that the pipeline is strong for robotics and discrete automation segment, and growth trends is expected to remain healthy in 2024. They've also mentioned the fact that they are unlikely to see any of the revenue slippages from Q3 into Q4, and also they've said that they will maintain the ROCE in the range of 21%. So that's a commentary coming in from management. They have been very bullish, and you can see the stock also seeing strong gains in trade today.
Okay, surely keeping an eye out on ABB among the top gainers today coming in the F&O space as well. But let's move on, talk about Hero Motor then. And Ankita, why is this one in focus?
Well, yes, Hero Motor Corp is in focus today on the back of a note by Morgan Stanley, and in fact, the stock is reacting to that note. It is down and out 1.5% in trade, because Morgan Stanley is maintaining an underweight on the particular counter, and they have set a target price of 3,638 rupees. Now they feel that the share price will fall relative to the country's index over the next 30 days. They estimate that there is about a 70 to 80% probability of that scenario happening. And the two-wheeler industry sales are growing at a 4% year-on-year versus 11% year-on-year growth in Q3 of FY24. And the retail market share has come off from 32% in December 23rd quarter to 28% in calendar year 24. Now, the limited valuation support and the earning risks are seen in this particular counter, and on the back of that, Morgan Stanley is maintaining an underweight, and we can see the stock reacting to it down more than 1.5%.
All right, coming to you then, Snehi, Sterlite Tech. This one is buzzing away in trade today.
Well, Cheryl, absolutely, because positive news flow coming in for Sterlite Tech. Lumos has selected Sterlite Tech as a partner to build transformative 100% fiber optic internet infra in the US and the Mid-Atlantic region as well. Lumos was an important part of Sterlite's recently inaugurated fiber optic plant in South Carolina as well. And Sterlite will support Lumos in a significant part of this critical 100% fiber optic internet rollout that it's aiming to do. In this long-term engagement, Sterlite will offer advanced purpose-engineered optical fiber cable designs to meet Lumos's network requirements. Now, Sterlite has end-to-end optical capabilities to carry out the same. So, on the back of this positive news flow, where it has been selected by Lumos for its internet capability and the carrying out of that, that stock is up almost 8% as we speak. So, well, good uptick coming in on the stock.
Okay, let's move on to the next stock that we're going to talk about, and that is Zaggle. Now, Zaggle has been in focus in the last couple of days. Yesterday, it was a tie-up that we saw with Ease My Trip. Now, today also, it has been in focus as it has entered into an agreement with Aegis Consulting India Private Limited. Also, today, we actually did manage to speak to the management of Zaggle as well. They see a strong, robust growth in terms of the corporate sign-ups as well as partner banks. They're targeting a 40 to 50% growth in FY24, 40+% growth is expected in terms of top line in FY25 as well. In the preliminary discussions for international business expansion plans, also they are in terms and talks with that as well, and they have enough growth opportunities in the corporate spending sector as well. So on the back of that, we are keeping an eye out on Zaggle. So let's go across and listen into Avinash Godkhindi, who's the co-promoter and MD at CEO at Zaggle, and what he had to say in terms of the growth outlook.
We are seeing very robust growth, both in terms of partnerships and corporate customers, sign-ups, including, Bennett and Coleman. Revenue growth in our business, all numbers, because there's a significant seasonality, we look at it on a year-on-year basis and not quarter-on-quarter basis per se. And year-on-year, we are already growing at about 37-38%, and we've given a guidance of YOY growth of about 40 to 50% for this year and 40% plus for the next year. And we are absolutely on track to, achieve those numbers. So from a revenue growth perspective, we're seeing very robust growth. We see tremendous tailwinds for our business. We see tremendous operating leverage kick in. We see a lot of benefits of being the leading player in this space.
All right, now joining us on the show is Nagaraj Shetti to take us through all the stocks that are moving based on technicals. A very good afternoon to you, Nagaraj. Thank you so much for joining us on the show. And Tata Communications, the first counter that you're going to talk about, how is it looking on the charts to you? Do you think that it can actually replicate what it did in the year 2020 with the returns?
Yeah, hi, good afternoon. Tata Communications has been a gradual downward correction over the last 1 or 2 months, and recently it has witnessed an upside breakout. The current chart pattern is indicating an upside breakout of the crucial important resistance around 1800 odd levels, and the current stock price is currently trading higher. Overall chart pattern is looking positive. I'm expecting this upside momentum to continue, and the next resistance to be watched for this stock is around the 1900 odd levels.
All right, let's shift focus. Let's talk about Union Bank, and that particular counter is in focus on back of its QIP. If you check Union Bank, the stock was trading higher 5% last time I checked. Now it's trading higher by about 4.7%. They informed the exchanges that they've approved raising about 3,000 crore rupees via QIP of shares. So on back of that QIP, you've seen Union Bank that is trading higher by about 4.6% as we speak.
Let's move on and talk about the next stock on the technicals, and Nagaraj Piramal Enterprises. Today this one is buzzing away in trade. What's the view on the technicals and charts at 940? Would you say it's still an attractive buy?
By looking at the weekly time frame chart, that itself is indicating that this stock has formed an important bottom reversal in the last couple of weeks. We have seen a formation of doji kind of a pattern. Technically, we believe that such patterns after a prolonged decline indicates the reversal of impending reversal of the trend. This is what exactly happened for the stock this week, that the stock has bounced back and currently moving above the crucial resistance of around 935, 940 levels. The falling wedge of the last couple of months is also indicating that the downtrend for the stocks seems to be over, and I'm expecting this stock to head higher in the coming weeks. So 1,000 is going to be the next resistance for this stock as per weekly time frame in the next 1 month.
All right, moving on. Ankita, let's put the spotlight on the auto pack and especially on the two-wheeler space. Why are they in focus?
That's right, two-wheeler space is in focus today on the back of a note by CLSA. Now, CLSA is saying that the Vahan retail number for the first 19 days of Feb 24 is indicating a slower two-wheeler growth. The two-wheeler retail volumes is likely to grow in the mid-single digit on a year-on-year basis in February 24. Now, the electric two-wheeler volumes are likely to remain flat on a year-on-year basis, and the competition is also escalating in this segment. They see that Hero and Royal Enfield retail volumes are likely to decline, and TVS and Honda should witness a double-digit growth in volumes. The counters are out there on your screen. Bajaj is gaining the market share in the 125cc motorcycle segment, but they see that overall the volume is likely to remain flat on a year-on-year basis. On the back of the note coming in from CLSA, you can see Hero Moto, TVS Moto all in focus in trade today. In fact, Hero Moto is knocked down 1% in trade today.
Okay, that's the view coming in on the two-wheeler space. But on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with more stocks after this break.
Welcome back. We are watching Market Fatafat right here on ET now. Let's put the spotlight on Jubilant Foodworks. My colleague Sumita Karir has just caught up with Sameer Kesripal, who is the CEO and MD at Jubilant Foodworks. This after the announce of bringing the iconic Louisiana chicken brand Popeyes in Delhi. Let's go across and listen to what he's saying.
As you know, that we're already present in Chandigarh. So Chandigarh was our first entrance into North India. That happened a month ago, or a couple of months ago. So we are actively looking for the right real estate where we can bring our famous chicken sandwich and bone-in chicken to consumers. So we are expanding, and in fact we have expanded in tier 2, tier 3 cities also in South. There is no reason why we will not do that in North India.
And what's been the demand and response like in those cities, the tier 2 cities that you have opened Popeyes in?
So I think firstly, Domino's is already over there, so we know what the demand is. So we enter cities where there is high demand for Domino's, or we look at the data for Domino's to decide upon the city. The response to Louisiana chicken, famous Louisiana chicken from Popeyes has been outstanding. Wherever we go, we see lines of consumers, and like you said, it's a rage or it broke the internet. Similarly, you can see the big lines outside our stores too.
Right, absolutely. I can see a lot of interest, as far as consumers are concerned outside the store as well. But sir, I wanted to check what really then is going to be the capex outlay, considering you have mega plans, and what is the revenue outlook, especially for Popeyes?
So we do plan to be the fastest QSR to get to 1,000 crores in India. It typically takes about 12 to 15 years for most QSRs to get to that level. We want to do it in a fraction of a time. Second, we are actually more real estate and supply constrained than demand constrained. As you can see, big lines outside the store. So we know we want to rapidly expand. We are getting a big 5 thumbs up on our food, and the food is loved in India, and we are ready to expand.
You're ready to expand, and when you say that 1,000 crores is what your plan is, that's pretty ambitious. You yourself stated that really takes about 10 to 15 years to achieve that goal. But what really gives you the confidence that you'll be able to achieve in the next 4 or 5 years is what you've stated, if I'm not wrong?
Yes, I think there are 3 factors that coming to play. Number one being the food, right? The food goes into the mouth, and therefore food is something which we are getting the love. Second is we've built massive food factories, which allows us to get highest quality ingredients at the right cost so that our store economic model really works. And third is, as you can see, we have perfected the playbook for India. We have a good range of non-veg and vegetarian options. We have the right set of equipment, and we have a trained crew member. So we built a strong foundation to expand to more number of cities and get to 250 stores and 1,000 crores.
And this brand also has offerings ranging from, I think, 99 rupees to going all the way up till 400 to 500 rupees, pretty much like your other brands?
Yes, so it has the single bone-in chicken starts with 99 rupees, and there are multiple options for consumers who are looking at their pocket and consumers who are coming in with their family or with their friends and looking to enjoy our chicken wings, bone-in chicken, chicken tenders, popcorn. Kids love chicken popcorn, so we have something for everyone.
I have to ask you this question about competition. Now, there is twofold competition in the market. Of course, from established players, not like Domino's is not established itself, but there are other players which are established in the chicken space. I want to also understand, how do you plan to deal with competition from copycat brands, which are really eating into the space?
Yeah, no, I think I am less competition obsessed. I am more focusing on customers. As long as customers like our product, and we have to work harder to make sure that we continuously innovate and give more value to our customers.
Bounce back in H2. Did that really happen? And hence, what is your expectation as far as costs and margins are concerned?
Yeah, no, so I think the bounce back didn't happen. And in fact, the festive season, not only for us, for the industry and the consumer companies in general, was muted than we all expected. Largely it is inflation driven. We do expect this to subside. Inflation has come down, and I think government policies have brought down the inflation. So we do expect the bounce back in demand to be sooner than later. I'm not going to give you a number this time. You'll otherwise hold me accountable to a number. But I think the right thing for us to do is give more value to consumers and continue to innovate on the food and the taste.
But by next quarter?
I do hope so, by the way. I do hope so, because in March, April, you also get salary corrections, and so therefore I'm hoping as inflation subsides, consumers will have more in their wallet to spend on discretionary items.
That's the word coming in from the management of Jubilant Foodworks. An interesting chat there. But let's move on, talk about the next stock that is in focus on the back of technicals. And Nagaraj NCC, what's the view on this one? In the last 6 months, we've seen a 53-54% uptick already. What is the upside that one could expect here?
Yes, rightly said, this stock has been an amazing run over the last many months, and technically higher tops and higher bottoms is indicating that the intermediate trend of this stock remains up. Though placed at the higher level 229, 230, still there is no indication of any reversal pattern building at the higher levels. The overall chart pattern is looking positive. The daily, weekly moving average supports are intact. I'm expecting upward journey to continue for these stocks, and 250 is going to be the next resistance, which is going to be achieved in the next 1 month.
Right, moving on, Snehi, let's talk about a stock which has actually given a break for Paytm from appearing on this edition of Market Fatafat, and that is Zee Entertainment. Second day in a row, third day in a row, we are talking about this one.
Well, absolutely, Cheryl. Now, the swings that Paytm have seen in the last few days, you can say the same thing about Zee Entertainment as well, because it did have quite a good day yesterday. But when you look at it today, it's down and out in today's trading session, 12.5%. Now, this is on the back of a negative news flow that's coming in for the stock. SEBI has found a hole of more than $240 million in the accounts of Zee Entertainment, and it's dealing another blow to this already embattled media firm, because less than a month ago, they also called off the merger with the Sony Group. So ever since then, this stock has been seeing some topsy-turvy moves, and well, as part of its investigation into the Zee founders, the SEBI like I said, found that about 2,000 crore rupees may have been diverted from the company. That's roughly $241 million. And that's roughly 10 times more than that was initially estimated by the SEBI investigators. So on the back of this negative news flow, the stock is not taking it well, and the street is not taking it well. Stock is down to more than 12% as we speak.
Okay, that's the word coming in on Zee Entertainment. But let's move on and talk about Raymond. That's the stock that is in focus as well. Actually, yesterday, during market hours, it was announced that there's a launch by Raymond Realty in terms of the first project in Mumbai that is outside Thane. This is going to be in Bandra East. And almost in terms of the revenue generation that they've indicated is around 2,000 crores. This will be exclusively in the high street retail space amongst other amenities as well. 16,000 square feet is the area that they are looking at over there as well. And obviously this is when you look at Raymond Realty, they've done very good and seen very good growth in the last few years as well. In terms of the Thane projects that have been going on, that also has seen a very good growth. So that's something that one should watch out for. Today we also managed to speak to the management of Raymond Realty as well, and they said that they're expanding their footprint out of Thane now, obviously with this Bandra project as well. They've seen a lot of infra development that has happened in the last 5 to 7 years as well, and obviously they've seen reverse migration in Mumbai. They expect revenue in the Bandra project to start kicking in from FY25. The real estate cycle in India, they're highlighting, is structural and cyclical, but obviously they're expecting that they're coming outside of the down cycle in the next around 2 years ago. So that is why they're expecting an upcycle in the real estate segment as well, and a good growth that they're expecting from this project as well. So that's the word coming in from the management themselves as well.
All right, that's the view coming in from Raymond management as well. But Nagaraj, let's talk about Raymond on the charts. This one has seen a spectacular rally. Where is it headed now?
Yes, it has been in a continuous rally over the last couple of years. What we have seen in between is the gradual downward corrections, range-bound actions, and eventually the stock has witnessed upside breakout in between. Recently, we have seen in the last 2 months, the stock has consolidated and moved into a gradual corrections with range-bound action. And this week, in the last couple of weeks, it has seen showing an upside breakout of the range. Currently placed at the hurdle of around 1900 levels. I'm expecting this hurdles to be broken as it happened in the past, and eventually this stock could reach up to the next overhead resistance of around 2100 in the near term.
All right, on that note, we slip into a break on this edition of Market Fatafat. More stocks to discuss on the other side. Don't go anywhere.
Welcome back, and you're watching Market Fatafat on ET now. Let's move on to the next stock on the technicals, and Zaggle is the stock that you've picked out for us. Today, when you're looking at it, a bit subdued in trade, but the last 6 months has seen a return of almost 88%. Nagaraj, what's the view on this one now?
To be positive, what we have seen on the chart is the consolidation patterns and a sharp up move. Upside breakouts of the pattern. Overall chart pattern is looking positive. Weekly 10 EMA has been offering support. This last 2 weeks we have seen upside breakout in the volumes, and RSI is also showing positive thing. The overall chart pattern is likely to continue, and this upside momentum to move into the next overhead resistance of around the 1900 odd level, which is the next crucial resistance at the highs.
About Solara Active then, and this particular counter is in focus. At one point in time, the stock was trading higher by about 4.8% or so. Yes, they had reported a loss when they came out with the numbers, but the company said that they target to double their operating profit by the end of FY25 from Q4 FY24, as per the transcript of their post-earnings investor call. This was actually made public post-market hours yesterday. So on back of that, you can see the stock is trading higher by about 2.8% now. Healthy commentary coming in on back of that. You can see Solara Active buzzing in trade.
Okay, that is Solara Active. Let's move on to the next stock, and that is Aegis Logistics. Nagaraj, on the charts, what is Aegis Logistics now indicating? Today it's down almost a couple of 2% as of now that I can see at 456. Do you think it's still a good time to enter, or maybe it's now time to start booking profits and just wait by?
I think this consolidation, whatever we are seeing at this point of time, is likely to be entry points at the lower levels. I'm not expecting any bigger decline as of now from the year onwards. The consolidation or a smaller decline is likely to continue, and eventually this stock could continue its upside momentum. At 410 level, it has witnessed a decisive upside breakout. This renewed buying enthusiasm is likely to continue after a small break, after a small consolidation, and the 485 is going to be the next resistance to be watched for the stock.
All right, moving on, Ankita, let's talk about Hindalco, and why is this one in focus?
Yes, Hindalco is in focus today on the back of a note coming from Nuvama, and Nuvama is maintaining a hold with a target price of 508 rupees on the counter. The stock is up 0.7% right now. Now, they feel that monetization of Novalis is on the cards, and we have also heard that Novalis has also filed, is going to file for an IPO very soon. And Novalis derived market cap is in 9.6 billion US dollars. And Hindalco has a share. We all know it's a subsidiary for Hindalco, and usage of money which would be received post the share sale is very, very unclear, but the proceeds can either be used to grow, inorganically or pay one-time dividend capital repatriation of Hindalco. Now, event does not provide any case for a re-rating, but the process would take at least 6 months if everything goes very smoothly. Listing of shares may attract, the HODCO discount too in the future, and event can be, sentimentally positive for this particular counter, and so they're maintaining a hold on Hindalco for now, and the counter is up 0.8%.
Alright, that is Hindalco for you on back of that particular brokerage note, as well as the news flow post which the brokerage note has actually come up. But let's talk about not one, not two, but three stocks that are in focus on back of its block deals that took place earlier this morning. First up, let's talk about Medicure. At one point in time, the stock was trading higher by about 8.7%. That was the most since August 2023. This after 12.4 lakh shares or 1.3% equity changed hands via block deals. No doubt, we don't have the names of the seller and the buyer in this particular block deal as of now. The next one is Campus Activewear. That one also saw an uptick of as much as 11% on an intraday basis, most since May 2022. This after it saw a block deal of about 1.3% equity that changed hands via block deal. Apart from that, Devyani International saw an uptick of as much as 5.6%, taking the stock to the highest level since February 2nd, and this after 4.3% of equity changed hands via block deal. The stock is gaining for a fourth consecutive session, but no doubt the stock is substantially off the day's highest point. So watch out for Medicure, Campus Activewear, Devyani International. We will get to know about the buyers and the sellers in the block deal post-market house today.
Okay, let's move on and talk about Medicure. Then on the charts, Nagaraj, what's the view on this one from you?
Stock has been continuously moving towards the resistance, and we've seen the couple of attempt of upside breakout around 1660, 1670 levels. Today also made an attempt of upside breakout and currently showing consolidation from the higher levels. The overall chart pattern is looking positive for the Polymed, and I'm expecting eventually the stock could break above the 1680, 1700 levels over the period of time. On that front, the next resistance would come in around 1850.
Alright, moving on, Snehi, let's talk about Vun Beverages, and why is this one in the spotlight?
Vun Beverages is in the spotlight on the back of a positive news flow. The company has announced the signing of an exclusive deal with PepsiCo to manufacture and package Cheetos in Morocco. The company's subsidiary Vun Beverages Morocco SA has entered into an exclusive snacks appointment agreement with Premier Nutrition Trading LLC Dubai, which is a subsidiary of PepsiCo, for the manufacturing and packaging of Cheetos in the territory of Morocco. Now, Vun Beverages will invest 100 crore rupees to build a dedicated manufacturing facility, and commercial production for the same is expected to begin on the 1st of May 2025, which is next year. So on the back of this deal that they have signed with PepsiCo, that stock is up 1.5% as we speak.
Let's move on to the next one on the charts, and Bajaj Consumer Care. Nagaraj, this is making the list of a lot of technical analysts in the last few days as well. What are you seeing for Bajaj Consumers? Finally, an uptrend is what one could expect?
Yes, of course, because we have seen sustainable downward correction in the past over the last couple of months, and this week's sharp up move is currently placed at the higher levels. Overall chart pattern is looking positive. It is indicating the formation of important bottom reversal and rise in volume during upside breakout, as well as the positive indication of RSI signals that this more upside could be in store for the stock. 265 is going to be the next hurdle to be watched in the near term.
All right. That's the word coming in on Bajaj Consumers. Let's move on to the next one, and that is Ramco Cements. This one is in focus on the back of a brokerage note that we have from Nomura. They've maintained the buy rating but reduced the target price by 12% to 1,100 rupees per share. They've also cut the EV to EBITDA multiple due to the concerns over capex, as well as the company has actually continued to overshoot its capex guidance. That's the worry that Nomura is highlighting. And when you look at what the management had given in terms of capex guidance, they revised their guidance also once upward, and now also the management has guided 1,700 crores in terms of capex for FY25, but what Nomura believes that they will be overshooting that as well. So a bit of a concern coming in on that front, and that is why they have reduced the target price by 12% from the previous target price. The new target price is 1,100 rupees per share, keeping an eye out on Ramco Cements.
Alright, moving on, Nagaraj, let's talk about AB Capital, and how is this one looking now on the charts?
couple of weeks back, AB Capital has witnessed a decisive upside breakout of the key overhead resistance of downsloping trend line around the 175-78 levels, and after that it has shifted into a consolidation. Last week we have seen the stock retracing down to the previous broken area. Technically, this is considered as a valid upside breakout, and eventually the support of around 178-180 level, the previous breakout area, could offer strong support for the stock. On the basis of that, I'm expecting upside bounce in the stock price in the near term, and once it breaks above the 190 odd levels, the 210 is going to be the next resistance for the stock in the near term.
All right, that is AB Capital for you. Let's talk about CIN Tech then, Ankita.
Well, yes, CIN Tech is in focus today because Jeffrey is maintaining a buy on this counter, and in fact, the target price for that is 760 rupees, implying an upside of 19% from the last close. And analysts of Jeffries believe that there is a higher growth for the company. They feel that they have also raised their EPS estimates for FY 25-26 by 2 to 4%. They feel that the company is also one of the top picks in the Indian financial space. CIN is at an inflection point to monetize investments, is what they feel. They feel that the international client ramp up is also likely to gather a lot of momentum. They see it the company breaking into larger markets and also exploring inorganic growth opportunities in the West. And the value-added services is likely to grow faster for the company. And on the back of that, they're maintaining a buy, and the target price is 760 rupees. And the stock is reacting to the news flow. It is up more than 1.5% right now.
Okay, that is CIN Tech, keeping an eye on that one on the back of a brokerage note. Let's move on and talk about PDS Limited. Why is that one in focus today?
Well, Winnie, PDS Limited is in focus today because the company has announced the expansion of its partnership with George, which is a fashion label of UK and Europe's retail chain Asda across new territories. Now, PDS is acquiring the existing George at Asda sourcing operations in Turkey. This new expansion will be under the collective Near East Sourcing Services division of the PDS. Now, as part of the acquisition, Istanbul will be providing the sources as a service within the EMEA region for the clothing, footwear and accessories categories. And well, in the last 20 years, this is the second exclusive agreement between George at Asda and PDS, because remember, PDS had earlier also cemented an exclusive arrangement and operations in Dhaka, Bangladesh, catering to clothing, footwear and accessories sourced from Bangladesh and India back in the year 2022. So, well, this is the second agreement that PDS has signed with George, and this happens to be for Turkey this time. And on the back of this news flow, the stock was doing pretty well earlier in the day, has lost all those gains but is managing to hold in the green, up 1% as we speak.
Okay, that is PDS Limited. Let's move on and talk about GR Infra. That one is up in trade as well. More than 1% of gain is what GR Infra is seeing today. And why is that so? Okay, as of now has given up those gains. 0.8% in gain is what it's holding on to. Now, this is mainly two news flows that came in. One, yesterday the company also said that they've entered into a share purchase agreement with Bharat Highways InvIT for a sale of entire investments in equity shares of 7 wholly owned subsidiaries. Now, these 7 wholly owned subsidiaries that they'll be selling, for that the company will receive units of Bharat Highways InvIT, and that is the main reason, one of the reasons why the stock is in focus. Other than that, also the company said that the company's wholly owned subsidiary GR Tarakot Ropeway has actually executed a concession agreement for Mata Vaishnav Devi Shrine Board in Jammu and Kashmir. So that's a deal that has happened as well. The cost of the ropeway project is expected to be at around 200 crores, and the company will provide 33 years of operation and maintenance services, including 3 years of construction period as well. So on the back of these two news flows, we're keeping an eye out on GR Infra.
All right, moving on then, let's talk about DLF. That particular counter has hit a 16-year high on an intraday basis. At one point in time, the stock was trading higher by about 2.8%. Now it's trading higher by about 3% or so, and it is reached the highest level since February 2008. The company has said that its unit has entered into a settlement agreement with Access Trustee Services and IREO to acquire land parcels in Haryana in Gurugram for about 1,241 crore rupees, and on back of that, it's taken the stock to a highest levels in about 16 years.
Let's move on to the next stock, and Thermax, that's the stock in focus as well. What is the news flow here?
Vinny, Thermax, the company has entered into a license and technical assistance deal with Flowtech Company Limited, which is a South Korean company, to buy the technology required for the manufacturing of polycarboxylate ether products, that's PCE products. Now, the deal with South Korea will help Thermax obtain the technology that is required to manufacture this polycarboxylate products to strengthen the construction chemicals business portfolio of the company. Now, the total consideration for the technology is pegged at around $300,000, out of which 50% will be adjusted against royalty payment and the rest as refundable deposits till the agreement period. So, on the back of this agreement that they've gone ahead and signed with this South Korean company, the stock is doing pretty well today, up almost 1.5% as we speak.
All right, moving on, Ankita, let's talk about paint stocks then. Why is the entire segment in focus?
Yes, the entire segment is in focus today on the back of a note by JP Morgan. Now, JP Morgan is saying that they're cautious, they have a rather cautious demand narrative. The industry-wide margin moderation is on the horizon. The margin will be challenged by the need for higher investments. The decorative paints demand has stayed subdued in the month of January to February. Now, the luxury paints demand has held up well, but they see the consumers now down trading from premium to economy. Now, there is uncertainty on FY25 revenue growth outlook as well. They're maintaining a neutral rating for Asian Paints and for Pidilite, they're maintaining a relative overweight considering the high exposure to a B2B and the infra business. Also, Jefferies has come out with a note on paints, and they're saying that Grasim is set to launch its paints product and inaugurate highly anticipated first paint plant in Panipat. They will also commission 2 other plants during Q4 of FY24 and 3 plants by the next 12 to 15 months. And Grasim's endeavors is likely to be to become a profitable number 2 player in the paints market in the coming years. And on the back of these 2 notes coming out, the entire paints pack is in focus today.
Okay, keeping an eye out on all those paint stocks today. But with that, thank you so much, Snehi as well as Ankita, for joining in with us. And on that note, we're going to step into a very short break. Don't go anywhere. We'll be back with more updates after the break.
Hello friends, this is Vishal Malkan, and today I'm going to talk about a very interesting pattern called the cup pattern. Cup and handle is a very popular pattern in technical analysis and very powerful and effective. This is my favorite, and the most important part about it is it's not very short term, it's like long term. You can invest with this pattern. Many people have this myth that technical analysis is only used for short term trading, but with this pattern you can invest for the long term. Let me show you some examples. What does a cup pattern look like, how it is developed, and how we can trade them. So, cup pattern on your screen, which is like when a stock goes through a cycle, which is the decline stage, degeneration stage, accumulation stage, advanced stage, and then breakout stage. Now, a stock goes from this cycle, many of the stocks go through this cycle, and we see that after a few years, it comes to the same level, which we call as the neckline, which is the resistance. We don't have to buy, we don't have to do anything till it crosses the neckline. Let's say once it crosses the neckline like this, that's when we enter, and that point is called as resolution point. That's where the pattern resolves, and then we start buying it. Now, very simple pattern. Not every pattern works the way it works in maths, like 2 + 2 4, because every pattern has a failure chance. So what is a failure? Like if it goes above and breaks down, that means the pattern is failed, so we have to have a stop loss. Now let's look at some example. Now this is a recent example of DLF, which was under that cup pattern for 14 years, since 2009 till 2023. As soon as it broke out that resolution point of 460 levels, it went to 800 plus within few months. That's the power of cup. Now, longer the cup, stronger the move. That one thing you should note down about this pattern. Like there are some patterns, some cup patterns which are 5 years and some patterns which are 15 years. So if I have to select between the two, I'll select the one which has 15 years because that much stronger and bigger base it has made for a big rally, right? So I'll choose the longer cup. Now you can see that once we enter, we put a stop loss below the neckline. Now let's see another cup. Some of the cups which we traded for our students also in the last 1 year is PFC. You see that again a 14-year cup, and there are like strong resistance at around 145, and as soon as it crosses, it almost goes 3 times in just a matter of few months. Now this is the power of technical analysis, and you can see some additional signals also if you look at the bottom part of it, where you can see that the volumes are also high. That means there is breakout with volume. There are big traders or whatever the big institutions are also buying, and that's a signal that it can go further up, and that gives you the confirmation. So you don't need to look at the news, or you don't need to look at any other thing, but just look at the chart and trade. So these are something which you can do for the long-term investing. This is not a day trading or an intraday thing. It's a positional or a short-term or a medium-term investment. Let's look at another one which was very similar. REC and PFC both go hand in hand, and both performed similarly after the breakout of the cup. In just 6 months, they almost went to 3 times. Now let's look at one more cup which is not very big. It's like a 5-year cup. And you can even see that after that cup completed, it went into a sideways market for a few months. This is a monthly chart. So each candle represents a month. So almost for 6 months, it went sideways. We call it cup and handle. So it made a handle and then it broke out. So this is also good, but compared, if I have a choice between REC and PFC and versus PGL, I would choose REC PFC because they are longer cups, right? Now let's look at one more, the sugar stock which is there. And you can see again there is a 5-year cup with a like a handle, and then it breaks out and achieves the target. Now what's the target? Now when you have this depth of the cup, almost every pattern, like we looked at MW pattern also, the depth of the pattern, which is the height, and the height of the pattern is the target on the top. So once it breaks out, let's say the bottom is around 100 and the top is around 200, that means the target will come to 300. So that's how you trade it. And you can use it also like a monetary targets like 10%, 20%, 30%. And at every 10%, you can exit some quantity because you can trade this in cash also. And put a stop loss just below the breakout point or the resolution point. You can put a stop loss of 2 to 3% in case it fails, and which does, right? So it's a very good risk reward trade. Like compared to that small risk, you have a very high potential, and that's what makes you a professional trader. Even if you go right on 5 and wrong on 5, that means the right will make big money and the wrong will lose small money. Still you end up making money. So this is very high probability, high return, low risk, and a very strong pattern which goes on months. It doesn't appear on daily chart or it doesn't appear on weekly chart. It does appear, but we don't trade it. But when it appears on the monthly chart, and the longer it takes to break out, that much stronger the move it will give us. And also make one more point that it doesn't appear on indices. It doesn't appear on Nifty or Bank Nifty, or they might not have the same effect. You should look for individual stocks because individual stocks will have their own story of going through that cycle of decline, degeneration, accumulation, advance, growth, and then breakout. So look for individual stocks, and I think we had a number of stocks breaking out of a cup in the last 2 years, and there are many cups in the formation. So you have a lot of opportunity to trade in 2024. I hope these short videos are helping you with the technical concepts, and keep watching them. And you can also watch them on YouTube. You can even watch them on my YouTube channel. Thank you so much. Till we meet again, good luck and good trading.